Bank of China technical analysis, and we're on the monthly chart. And what we see at this point is that the market had given us this double bottom over here, which has a neckline more or less at that point. And ideally, as you guys know, we want to see a price actually closing above that neckline, and then in future come back to the neckline to test that very strong level of support. And at that point, if it aligns with any key numbers that we have on the Fibonacci retracement tool, is actually where we would look for potential buy opportunities. And we can also see that more or less this particular structure started around that level, and ideally we want to see price move all the way to that level to close, as I said, in line with where it had started. However, having said this, we can see that the market at this point in time has also created a gap here where price was at that level but then jumped to that level, creating this gap. And what gaps are, as you guys know, are areas of liquidity, and what liquidity is money, and that money needs to be triggered by the market at one point or another. So it is quite possible that we may see price actually head up to at least close that gap, right? And one of the reasons why we may potentially have this gap is because, remember, we had as much as we had this huge W structure or double bottom, we also have another one here. And what normally quite happens is that whenever we have these structures, a lot of traders and investors actually buy at that point, putting their stop losses just below, right? So this may have been a stop hunt to grab the stop losses located here, and what may possibly happen is we may see the market continue to move further up. I hope what I'm saying makes sense. I'm just gonna add actually my neckline for that huge W structure, which is over here. And not only is this level the neckline of that W structure, if I can just mark it, this W structure that is, right? It's also now at this point in time a very strong level of resistance, as we've had multiple rejections at that level, and in the future it is quite possible that we may see price reject at that level and then potentially push further down, as much as we have this big W structure or double bottom. Remember also that we have a lot of money stuck here in the form of stop losses, just like we had here, right, where people bought on the second leg and placed their stop losses below. At this point as well, people bought here and placed their stop losses below. So we may see something like this, or we may potentially see the market actually disregard this level by closing above it, come back to the level to give it a test, and at that point this level would then be a very strong level of support. And as I said, if the level aligns with any key numbers that we have in regards to the Fibonacci retracement tool, we would then potentially look for buy opportunities, and our take profit should be around here, which is where that huge W structure started, right? Anyway, let's head down to the weekly chart and let's have a look. And just to recap, remember on the monthly chart we said that we had this huge W structure, a double bottom, which has a neckline there. We also spoke about how the market had given us this W structure over here, and how price was here at some point but then gave us a gap to that level, which was probably stop hunt, because we have a lot of stop losses located here, and we may potentially see the market move further up, right? And also bear in mind that because we had this bigger W structure over here, we also have a lot of stop losses here, and it is quite possible that price may push all the way to that level, only to push down to grab all of these stop losses and then again potentially move further up. I hope you guys can see that. But here we are on the weekly chart. What else do we see on the weekly chart? On the weekly chart, we have an opposing structure, right? Remember, let me just zoom out again. Remember, we have this huge double bottom, and then we have this smaller double bottom as well. To add to that, we have an opposing structure in the form of a double top over here, right? And it has a neckline more or less at that point. So we have two opposing structures. Let me just actually zoom in. So at this point in time, we have two opposing structures. Number one, we have this one, which has a a neckline there. To add to that, we have a double top here, which similarly has a neckline there. So this means that buying or selling within this region is a bit tricky and risky, as the market may head in either direction, right? What may possibly happen is price, in fact, this neckline of this W structure is no longer relevant, because price actually violated it by, moving to this level. So we can just disregard this structure over here, which is the neckline of this W structure. The most important one at this point in time is the neckline of this double top, right, which is over here more or less. And what may possibly happen is we may see price come back to the neckline to give it a test, and at that point we may see again price move further up. Another thing that I also want to bring to attention is that as much as we had this double top here, there is a bigger double top which is over here, which similarly has a neckline at that point. So should price close below this neckline over here, let me just actually mark it. There we go. So should the market close below this neckline over here, there's a very big chance that we may see the market actually move further down, right? And that is because we have this huge double top or M structure, and it started here, and ideally we want to see price close pretty much in line with where it had started. Another thing that motivates for why we may potentially see the market move further down to around this level is that we have this candlestick over here, and as what it is a if I can just mark it, it is a bearish candlestick. Uh, it's a bearish candlestick which has quite a small body and a relatively long lower wick, right? And that means that where that wick ends at the bottom, we have a lot of liquidity there, and it ties in with how I said that we may potentially see the market move further down to grab that liquidity, as that liquidity is money, right? So it's now actually a good time to consider buying Bank of China. At this point in time, I would say no. I think the best thing to do at this point is that one should wait for price to at least close sufficiently below this neckline, and if it heads back to the neckline to give it a test, at this point is where we may look for potential sell opportunities to around that level over there, right? However, having said that, just remember that the market had also given us this W structure, and price came back all the way to this level to trigger all of the stop losses located here, more or less. And once that's done, we may potentially actually see the market continue to move further up. So what am I saying in conclusion? In conclusion, I'm saying that buying or selling Bank of China at this point in time is a bit tricky and risky, and at this point I would not buy or sell for that matter.